I'm surprised that it's actually Jio's number which is flashing first on your screens. Typically, it's the oil and gas business. Ajay, the 6-month PAT at 1671, and these are just the agency reports as of now. I don't think we have an official press release just yet. But is it matching up broadly with the expectation that was on the street?
Aisha, okay, now the 10,360 crore number, the PAT for the quarter has come in. We were expecting 10,000 crore odd, so it's close to 350, 400 crore higher than estimate, so it should be going down okay. Remember, this time round, this is the consolidated number, fine. So 360 crore beat as far as the net profit is concerned. This time around, there was some amount of soft expectations because refining and petchem were not doing that well. But they have come out and delivered as far as the net profit number is concerned pretty well, I would say. Let other numbers actually come in. And okay, Nitin Soni is there with us. Nitin, let me come to you. Jio this time round was expected to do pretty okay. 306 million subscribers now. ARPU almost touching 130. What's your own profitability expectation on a quarter basis?
So thanks for having me. We don't have a profitability expectations. I think we look at the tariff number, and 130 looks to me a bit low. We were expecting it to be a bit higher compared to the last quarter. So it really, boils down to the fact that Jio has been adding a lot of low-value subscribers and adding to its subscriber base, but they are not incrementally discounting the tariff. So I would say it's a moderate kind of news that the ARPUs have come at 130. We were definitely expecting it to be higher.
Hang on there because we've got some more numbers trickling in. While the PAT may optically look like it's largely in line at 10,360 crore rupees, I think the sticky spot is going to be what the top line numbers have reported, because it stands at about 1.42 lakh crore rupees versus the ET Now estimates of 1.5 lakh crore rupees. I'm going to quickly take it across to Prabal Sen as well and try and figure out whether the prima facie numbers are falling in line, Prabal, with your expectations or not.
Yeah, from what I can see on your channel, the results prima facie seem to be ahead of estimates. I haven't had a chance to look at the segmental profitability, but we were looking at actually profits of less than 10,000 crores on a consolidated basis. So from that basis, the results look to be slightly ahead. I'm not too sure what the GRM has come in at. And Jio ARPU I heard was somewhere around 130, which is a bit ahead of what we were looking at. And even the refining margins, do you have the refining margin number yet?
1 second, I'll just come to you for one specific query. There's an entry of 30,000 crore, the appropriation entry to General Reserve, Prabal. What do you make of this? What purpose do you think would this be serving?
Not too sure. As I said, Ajay, I have not had a chance to look at the press release or the notes to accounts. So it would be difficult for me to comment on what that 30,000 crore is. I would, I would imagine it's probably something to do with the accounting for the InvIT for the Jio segment. But one would have to really read the notes to take a comment on that.
While we dig out more numbers, and we as well are just, waiting for the numbers to trickle in, I just want to reiterate all the numbers that we have as of now. The consolidated PAT for the quarter stands at 10,427 crore rupees. That's in line with at least the ET Now estimates. The top line, you could say, has somewhat fallen short because it's come in at 1.42 lakh crore rupees versus the ET Now estimates of 1.5 lakh crore rupees. The consolidated EBITDA versus our poll of 20,000 crore rupees, that stands at 20,832. So a marginal miss as well coming in there. And yes, there's that appropriation entry of 30,000 crore rupees to the General Reserve. I'm going to quickly take it across to... Okay, we will stay with Prabal while we dig in more details. But Ajay, just prima facie, would you say that the numbers are at best in line?
Aisha, I would say that because this time around there was some amount of shutdowns undertaken. So the top line was supposed to be on the lower side, and that's exactly how it has come by. There would also be some, I'm still waiting for the GRM number to come in, because though operating GRMs could be lower, but don't forget that the crude prices actually rebound on a sequential basis. So inventory gains would have cushioned their profitability, because this 430 crore higher net profit number probably is also a function of how inventory gains would have aided their profitability. The street is estimating anywhere between 8.5 to 9.2 at max as far as GRM number is concerned. Prabal, what was your own estimate for GRM?
At about $8.1 for the quarter.
Hang
so
on, 8.2 is the number which has come in. $8.2, right? It's lower end of the margin range. Sanjeev Bhasin is also here with us from IFL. Sanjeev, the latest number is $8.2. That's the incremental number flowing in. What's your take? Doesn't it look like it's on the lower end of the range which the street was working with?
Well, yes, there has been, it is lower than estimate, but you have to take into account that there was a shutdown for some time which may have affected it for this quarter. And I think that is being priced in also. But the net profit numbers are way ahead. So we have to see, this is the transition of Reliance from GRMs. Now it's more about Jio. And ARPU numbers are very, very strong, which I can see on the face of it.
Indeed, you summed it up quite nicely, Sanjeev. Prabal, just want to get back to you. 8.2 on the GRMs, does it match up with your expectations, or do you think they've fallen short, but for rightful reasons, like Sanjeev was saying, there was that temporary refinery shutdown as well?
As I said, this is exactly what we were looking at. This is almost bang in line with what we were looking at about $8.1 or so, primarily because of the shutdown and also because of the kind of damage that gasoline spreads have seen in this quarter compared to Q3. So it doesn't really come as a surprise that GRNs have come in at, this is probably a 4.5-year low or something, if I'm not mistaken, for Reliance. The positive thing is that spreads have actually shown an improvement. From April onwards, gasoline spreads have already shown an improvement back to about $6-7 or so from the levels of, almost zero that they had fallen at certain times during Q4. So it's a temporary aberration, and as Ajay was mentioning, there was a shutdown which also will get alleviated in Q1. So not something that I would worry about too much structurally, but it does spoil the party a little bit for this quarter. That's about it.
I don't think you've got to worry, given the kind of move that one has been seeing on Reliance already, and the run-up in the stock just ahead of the numbers. But got some more details coming in. The Petchem EBIT margin, that stands at 18.8% versus 18% on a sequential basis. And we've also got the 4Q Jio PAT figure, which comes in at 840 crore rupees versus... I don't have the corresponding figure, but the operating revenue for Jio, that is, for the fourth quarter, that stands at 11,106 crore rupees. Sushil, what is your take on the numbers so far?
Thanks for having me on the show. I think seeing the market conditions on the businesses where Reliance operates between January and March, be it oil and refining and marketing or petrochemical, it's a clearly indicative, and at the same time rupee was appreciating, volatility and consumption pattern, industrial production being down in price, means it's clearly indicative that petrochemical reflects on that, and refining and marketing reflecting what globally was happening. So if you're looking at market conditions and seeing Reliance result, I think it's fairly stable. But as a stock price has run up and people are looking at profit, they would be disappointing. So it depends on what angle are you looking at the profitability, because the industrial production where it stands and the numbers which are being month on month being flashed between Jan and March, it's clearly indicative that our economy had slowed down and the consumption pattern with auto and everything. So all the businesses are linked where plastic consumption or polyester consumption is concerned today. So I think on a basis, I'm happy with the EBIT number specifically on petrochemical, and refining and marketing was expected lower, so it's fine. But I think looking at the total contribution of core business, I'm quite optimistic as all the value integration which will throw up in the next 12 months.
Right.
At 1385, Sanjeev Bhasin, do you think that after these numbers, there is scope for disappointment on Monday? Because, the voice of the market seems to be telling you that, like Sushil was just mentioning, anticipation was pretty high, and the built-up in the stock did tell you that the street was expecting a blowout quarter.
Well, any disappointment will be just marginal for 2 hours or so, because Saudi Aramco is going to buy 25% stake. The company is now willing to monetize some of the energy assets, because the whole thrust is now on Jio, the Supermart, the Netflixes, the Amazons of the world, and that is why it's a slow but steady transition into a technology company. So any decline would be a buying opportunity. Look at the long-term window. 5 years of capex is now going to be realized, and monetization of assets is the key on the energy side.
Right. Sushil, you know, the petchem end of the business has actually surprised also, because it's not as weak as the street was estimating. In fact, there's a you know, almost a % higher margin number, though the pricing was not very favorable. Also put in perspective for us the environment of refining and petchem, because as Sanjeev was saying, after all the downstream businesses are now on the radar of a very large buyer. Would they be able to get good valuations with this kind of performance and the environment?
See, I disagree with the street and the media. What is being speculated that Reliance is going to do something which doesn't suit their style and businesses. So is it that Saudi Aramco is going to put in money in the future businesses or the past businesses? The assets which have been created in last 20 years and 15 years, does it need any money, and why would you sell asset at a price where shareholders are already putting at 450 to 475 for petrochemical division and refining division, and then you net off with debt? So I am still awaiting the data from what Mukesh Ambani or the analyst meet throws up in giving us guidance towards future. But where petrochemical business is concerned, it's on an import parity which you need to look at. Second thing, the domestic consumption pattern is a second point which we need to keep in mind. If global production and Indian production both are not comparable at the same time, domestic interest where demand was on a surge, petrochemical division would show you a different picture. The slump in demand in Jan to March is visible, with the rupee appreciating compared to which was in the previous quarter. So keeping that in mind, I think petrochemical division profit was tremendous and a positive one. Refining and marketing is more from a global angle. On the throughput, I don't have the number, but I'm quite sure it would be in the vicinity of 18 million tons. Keeping both on mind, I think numbers should be reasonable. Disappointing if you take a comparison that way, but it is not that bad as what is being made out. But yeah, but stock had run up for various reasons because of all the speculation which is going around. What is the investment coming from the Saudis, and what's going to happen with Jio, and what's going to happen with Reliance Retail. Ultimately, those businesses have to show the indication what everybody is expecting, and Reliance might be working for it. But it's a story which will unfold over a period of 12 months. So if the stock is running ahead of time, it may have a little consolidation period. And looking at the market condition, one needs that consolidation. If you ignore, and if you want to take, if you take a 2-year view or a 3-year view on a totality of business, I think stock is positive. Don't take a 2-month view or a 2-day view, then you will get disappointed.
Fair point. But the street would react when we open for trade for sure in the medium term to these numbers, and the stock is almost at 1400. Prabal, what's your take on the valuation? 1400 rupees is the price. How do you rate the valuation now?
I'm afraid I don't have official coverage right now at this point of time on the stock at Centrum, so I will refrain from commenting explicitly on the valuations. I think if you look at consensus earnings, the stock still trades at fairly attractive valuations, and frankly, with the kind of multiples that non-energy businesses get, if you look at comparable peers, there is still a lot of scope for further re-rating, specifically from of Jio as well as the retail business. So from an upside perspective, I think there is still upside potential, depending on how and how much the scale and scope of the non-energy businesses continues to grow. So from that aspect, we would remain positive, but I'm afraid I can't share specific numbers right now.
Yeah. I think we have a comment coming in from Mukesh Ambani saying that, and he's talking about the growth. If we could just get back that quote plate and, you know, for the benefit of our viewers, he's talking about the growth in data and voice traffic that has at this scale, he's saying, has been unparalleled. What else is he talking about? He's talking about Jio, and he's saying Jio's network is one of the largest mobile data networks in the world, carrying over 3 exabytes of data every month at unmatched download speeds. And I think, you know, there's a very stark change here, Ajay, much like what he's talked about in many of his analyst meets as well, and many of the shareholder AGMs too. He's talking about Jio. He's not mentioning any other business.
Well, that's correct. The contribution of new businesses in the press release and management commentary also is going
Is a
higher with
telltale
each
sign.
passing quarter.
Yeah.
So clearly, in a way, it talks about the management tilt. But I think Sanjeev raised that point that the reason perhaps why ARPUs this time are slightly softer than what the street is estimating, 126 versus estimates of 129.30, but the subscription numbers at 306 million. All right, Sushil, do you think that last few batches of addition is actually low value addition of numbers which is happening? Could that be a possibility?
I think when you dissect the consumer story of India and where telecom is concerned, I think the high-end customer experience, once Reliance unfolds the entire program as what they would envisage over a period of 12 months. And second thing, fiber to home is going to be the story where your ARPU and per user database, what we are going to spend at home. I think a consumer habit which has gone down to 120 rupees, 130 rupees will tick up once Reliance market share is in 35 to 40% and not at the current level. They are still in the harvesting mode where they want the crop to be a little larger than where they stand today. So possibly 2019 would go towards it and 20 will show you a bounty where the crop size will be very positive and a positive yielding one.
I want to talk about what they've done for the retail end of the business as well, because their retail revenues have gone up significantly. It's up a good 89%, and 1,30,000 crore rupees is where the retail revenues for the quarter gone by stand at. It's a record retail EBIT of 5,546 crore rupees, again up a staggering 169%. Retail now has 10,415 stores with reach across 6,600 plus towns and cities. And, this is a sizable business, Sushil, clearly growing with a very, very rapid pace. Do you think in time, there is telecom and retail which could actually overtake perhaps the oil and gas business for Reliance? Over time, of course.
If Aisha, if that question was for me, I can answer it.
Sushil.
Yeah, see, basically my personal view is Jio will be a larger pie in Reliance's business. Retail would be a good story because India's demographic dividend, the population, but irrespective of the volume and the EBIT is not going to give you a kind of an indication because this needs a continuous upgrade from what kind of consumer experience and customer experiences are going on right now in their stores. And I think the formats will keep changing and the business style with Amazon and Walmart being in India and what kind of competition DMart throws up. So all those are going to be big challenges, how future and how they integrate the Jio along with retail, that needs to watch out. So e-commerce space where Reliance is yet to commence in the way others are in space. So keep an eye on it, but I think per share value core businesses are going to do a stable thing because they will have 40 to 50% market share and they would be a global top 3 or top 4 producer. And as Indian markets develop, the core business potential to double their profit from where they stand today in next 5 years is definitely possible. And for other divisions to come to there, Jio has a potential. I think retail to reach there will take miles and years to come.
Right. Sanjeev is back with us. Sanjeev, have you managed to look at the notes to the account where on the point number 9 they've shared that the board has approved an appropriation of 30,000 crore to General Reserve, $4.3 billion. Any idea there?
No, I'm just hearing it from you. I've not been able to see that, and it will be difficult to comment on that.
You want to take that? Why do you think this entry has been made? Is it because of the two businesses being hived off into InvIT structure? Because just a couple of days back they had announced transferring the tower business as well as the fiber assets into two separate InvIT structures, which people are estimating that probably is a precursor to a possible stake sale ahead. Sushil? Okay, so it's on page number 32 actually. All right. We'll get back to that. But in the meantime, you can look at that. Sanjeev, what's your take? How do you think the stock will open for trade on Monday?
No, Ajay, if you try to time Reliance on a results basis, you missed out on the largest rally in the last 3 years. And I think that all declines will be buying opportunity. It has been one of the pillars of the market upside, and you've seen it's been 8 stocks which have heralded the market to new highs, including Reliance. So any fall would be a buying opportunity. There could be a correction or consolidation for the next 2 days, but we think that Reliance is headed to a 10 lakh crore market cap, maybe in the next 1 year.
Right. Okay. Sushil, did you manage to dig out that entry? Point number 9 on page 32 as to what this 30,000 crore rupee adjustment is all about?
No, I just got the exchange press release, so I'm not been able to read out so much.
Okay.
But I think it needs a little time to get into the details.
Fair point. Ajay, but let's talk about, these are cash guzzling businesses, whether it be the oil and gas business, whether it is the retail business, or for that matter, Jio now. Do you think mathematically it makes sense that the 25% stake sale of Aramco happens? I mean, obviously the street was reading something into this news, which is again unconfirmed as of now.
Clearly, the timing of this news is very interesting. Also, last quarter, too, the stock and the street was excited about the commentary from the management right after the results. They had said in the briefing that tower assets and fiber will be up for sale. Nothing has happened yet, but transfer of that business to InvIT structure has happened, which is seen as a progress. And now after the visit of the Prince of Saudi and of course Aramco officials, news is trickling in, some monetizing could happen there. So though Sushil is not agreeing with us, but it's not completely ruled out that some monetizing of old businesses.
Because how will they pay this kind of sizable debt on their
And they have repeatedly on public platform and privately to investors have said that the management focus for the next 24 months is to delever the balance sheet, because that is actually becoming a big drag. No matter how much good cash flows are, servicing them is an issue, and the management really wants to cut down on the debt level. So Sushil, you have a take on that?
Yeah, see, basically keep in mind that Saudis are investing for petrochemical and refining business, whereas today Reliance Industry has Jio, retail as well as existing businesses. If they take a 25% stake, Reliance will have to carve out the petrochemical and refining business into a separate entity or make a subsidiary. And if, as a shareholder, if I have a holding company which is trading, you know what the condition in India on holding company is given. So my personal understanding, as what I understand Reliance is already putting things in place as an enabler to expand their capacity from 70 million to 100 million tons, maybe possibly a future, more of domestic and global, and Saudis must be looking at processing 30 million tons of crude from this location for domestic market and maybe for Southeast Asia, more value proposition along with value added products and something else. I think it is the future of Reliance business in the segment where Saudis are interested, and not the past business which are 12 to 18-year-old refineries, depending which one we are looking at, because they already written down value, but they are throwing so much of cash. So I don't have any understanding from a point of view which the media is speculating, but my personal take is Reliance might be attracting a lot of capital towards the future expansion, which is for the next 20 years of India and the global markets where Saudis are interested, because Reliance is one of the most efficient producer of oil and related products, along with the global 5 names which you can take in the US which are comparable.
No, clearly Sushil, no one is saying that they want to exit this business, just that they want to monetize it, because every incremental 1,000 crore now, according to them, is aimed at the consumer businesses. So who puts in this additional expenditure which you're talking about? So probably a big deep-pocketed partner can come in well, and Saudi Aramco in the last visit was very clear about value-added chemical expansion in India and making India a probable base. So probably, of course, that is the thing. But where do you see the valuation of the overall company at 1,400 rupees go from here on in this environment and the way fundamentals are shaping up?
So basically, Ajay, you are indicating that Reliance will have 3 listed entities. One will be petrochemical and refining, that is the core business, the Jio business, and third would be retail. And that's the way the structure will work, which I have no knowledge about it and I can't speculate about it.
Yeah, and that has been the speculation, Sanjeev, and I want you to also comment on it. For a while, market has speculated that eventually that's where Reliance Industries is headed. Broken down, 3 different entities, one oil and gas business, one retail business, and one Jio. Okay, we seem to have snapped that line. Ajay, so let's you and I chat about that because we've already spoken with Sushil about it. It seems that eventually that's where RIL would head.
No, clearly, if you remember, Jalarani of Edelweiss was the first analyst on the street who actually subscribed value to the Jio business. And with every passing quarter, the value in out of the 1400, 1500 rupee average target which the street has, for Jio is only going higher, almost to 250 to 300 rupees now. So the composition of, the contribution from Jio and retail will only start going higher and with each subsequent quarter. And as Sushil was saying that the stable businesses will roughly have half of the valuation.
That reminds me, there's nothing about Hamleys, is there, in the press release, Ajay?
Oh, yeah,
because
that's correct.
That was also part of the speculation, right?
It was spoken about close to 400 crore, probably they haven't announced it yet. But Sushil, do you think this is a fair estimate? The stable businesses roughly 50% of the value, and Jio and retail, say 35%, and the rest 15-18%. That's a fair kind of a breakup in the medium term for looking at Reliance contribution.
See, if you look at the large brokerage houses reports, the Reliance Petrochemical and Refining are in the region of 425 to 475 per share. So combining both would be in the vicinity of 900 to 975, 950 per share, and the balance is between retail. So retail would be approximately 150 bucks, and 250 to 200 would be on Jio because of the debt which should be loaded on Jio and not on other businesses. So keeping that in mind, around 1300, 1350 if you break up, and depending on what value you want to ascribe for future. But my personal is I would on a simple maths and the core EBITDA which we know and where the future is headed, I think 450 for refining and marketing and 450 for petrochemical is a fair value. If you get a positive guidance in the analyst meet today or in the presentation tonight, I think one can have a fair estimate for growth there, and then the balance is on the direction of Jio. And I think the profitability and angle which we are looking at Jio should be the story maybe 12 months later.
All right, gentlemen, all of you, Prabal, Sanjeev, Sushil and Nitin, thank you so much for joining us for this special coverage of Reliance fourth quarter numbers. Aisha, though the stock was higher by 3%, as you just said, going into the numbers, in my view, the numbers are slightly mixed, and one cannot rule out some amount of profit taking because bulk of the news, of the near-term news, is actually in the price.
Yeah, and that's exactly what Sanjeev also was saying. However, he also said that whatever decline, it's going to be bought, provided the market remains as gung-ho as it is. But anyway, we're going to wind up this special coverage in Reliance numbers. It's a long weekend. We'll see you again with all the trading action on Monday morning.